prior year, can I apply for that?
Yes.
Cause I just found out this, so would I need, separate paperwork for that?
You would use the same application. If you're wanting to backfile and you're meeting the qualifications of prior years, you could just provide proof of income for those years. You can backfile up to 3 years. So this year, you could backfile back to 2021, and that would be based on your 2020 income.
And the
please note,
$64,000 does not apply
yes,
to this year.
please note the 64,000 is starting this year. So your 2020, 21, 22 income would need to be under 45,708. Great question. All right. So once you're on the program, you are required by law to renew at a minimum of every 6 years. So Pierce County is currently on a schedule based on last name. So this year, anyone with the last name D through G is renewing with us. Those get mailed out the first quarter of each year, and this year, those are required responses by middle of May. Life happens, so if there's something that changes as far as your income, maybe you originally qualified at a higher income amount, and your spouse passed away, or you lost some sort of benefits that you were receiving, you no longer have an IRA, or those sorts of things, you can update with us using a status change app. And that would, again, be based on prior year income. So if the change occurred last year, you could update with us this year, notifying us of the change, and we would adjust your taxes accordingly.
Now, if it takes 6 months for this is that retroactive to April when it's due?
So no matter when we process your application, it's retroactive to January 1 of this year. So
when taxes are due in April,
you have a choice.
then what?
Your mortgage company, if you have a mortgage company, might not be very happy with you, or they may pay on your behalf prior to us granting an exemption. At that point, you may be eligible for a refund or a reduced second half bill.
So I would pay whatever shows in April, but then when it goes through, then I'd be rebated back? Or?
Yes,
Okay.
correct. And if it's a situation where you may not have funds to make that first half payment, and you don't have a mortgage company who's paying on your behalf, we do allow you to wait to make a payment until we make a determination on your application. So we would waive any interest or penalty that accrues up until that point. But you would want to get that application in prior to the due date for that first half payment.
And the due date again is?
April 30th.
April 3rd.
Yeah. So there are 3 income categories for our program. So depending on what category you qualify for will determine how much the value that you're taxed at is reduced. So category 3, which is going to be the highest income category, is income between $55,000 and $64,000, and that would exclude you from paying any of the excess levies or state schools part 2. So there's no reduction on your value. It would just be a reduction in the levy rate. At a category 2, that's for income between $46,000 and $55,000. At that level, the value of your home that you're paying taxes on is going to be reduced by $50,000 or 35% of the value that you've been given, not to exceed $70,000. So typically in the market where housing prices have gone up, and so your assessed value is a little higher, you're probably going to be getting that 35% or up to $70,000. And then the category 1 is income from 0 to $46,000. And that's going to be an exemption from those levies, and then also $60,000 or 60% of your value of your home, whichever is greater. So that category 1 is going to be the biggest reduction, and we kind of put together a little example of what that looks like on a home valued at $500,000. So your full rate taxes you'll see in this example are about $5,500. You can see the levy rate here cuts about in half, so it goes from 11.1 to 5.6. And then I've got examples here about what that looks like for each of those categories. So you can kind of see the difference in the reduction there. So pretty significant if you're qualifying for that category 1, but about half, like Assessor Treasurer Lonergan said, for the category 3, you're paying about half of the full rate taxes. Any questions before we move on? Yes.
I know some seniors have asked me if they're on the program now, will their tier adjust automatically so they get a better rate in the new year?
Yes, so anyone currently on the program, they were automatically moved to the category 1 because the previous income limit was $45,708, which falls under that category 1 of now $46,000. So everyone was automatically moved to that tier. Is there any other questions before we move on? Yes.
Okay, now, if you apply like in 2023, you apply for 2024, what is the income level?
If you're applying for 2023 taxes,
Yes.
that would be based on your 2022 income, and that would have needed to be at $45,708 or under.
So in 2024, then the 64,000.
Based on your 2023 income.
Okay.
Yep.
2020. Okay,
Yeah.
thank you.
You're welcome. Alright. Yeah,
The chart that you just had up there, is that
Mhm.
is that online?
it is not online,
Okay.
it's just, but we can make a note of that, maybe put an example online for taxpayers.
Just to see the
It's on
the
page
levels.
3.
Okay. Oh, the levels, yes. So not the example, but the income levels, are on page 2 here, or page 3. Yep. Yeah.
Can you email out a PDF of this slide deck?
Yeah, I think we could probably do that. Okay, so this is our, website, Pierce County's website. So we're gonna kind of go through navigating the online application. So you would click on property search down here in the left-hand corner. And on the Assessor Treasurer's website, on the left-hand side, you'll see an option for tax exemptions and deferrals. So you would click on that link. And then there's an option for senior or seniors or people with disabilities, so we'll click on that. And then there's gonna be a button to apply online. So we're gonna have a welcome screen. It's gonna talk about the program basics, kind of like what we're already discussing right now. You will have an option to choose if you're a new application or you're renewing. So only renewals would be anyone with the last name D through G who are already on the program this year. It's gonna go through some eligibility questions, asking basic information as far as do you meet the 3 qualifications: residency, age or disability, and income. So it'll ask just if you're qualifying based on those things. So at the bottom it'll say, based on your answers, you may be eligible. If you are disabled, you do need to provide proof of disability to qualify. And I don't know, the words might be kind of small, but if you were awarded through the VA, we ask for a VA letter stating when you were awarded your VA disability. If you're not yet a senior, you would have to be rated 80% or higher to qualify. If you're a senior, we still need a letter stating you receive a service-connected benefit. And that does allow us to not count that portion of your income towards the total household income. So moving forward, you're gonna enter your parcel number and just your basic information. It's gonna look a lot like the paper version. So it's just gonna be your mailing address, your phone number, and your relationship status. We do ask the date that you occupied the property because residency is a requirement. The physical address, If your property is in trust, we do ask for a copy of the trust to ensure that it's meeting ownership requirements per the revised Code of Washington. If anyone else is living in the home with you, you would check yes. We do ask if they contribute to the household income, so if they're helping to pay utilities or those sorts of things, that would be counted towards your income total for the household. We don't count their full income, just what they're contributing. Is that your question?
Well, yeah, I have an adult son that lives in
Okay.
my home, he
Yeah.
pays me rent,
Mhm.
but his income is,
So we wouldn't count his income, we would just count what he's paying in rent or contributing to the household bills.
I'm gonna jump up 1 second just to say, we don't know how this is gonna come out, but there's a bill in the legislature right now that actually would allow you to not count any rental income if you rent out part of your house or even an accessory dwelling unit next to your house or whatever. At this time, it does count as income.
Yep.
But this is an idea of encouraging people to, make home space available to people who need a very inexpensive place to live. So it would be one more, deduction from your income if the bill passes.
Yeah.
What about non-federally taxed disability income?
Is it, what form?
It was a private disability policy.
Okay, so that we do count as income.
It pays, but I don't have to pay federal tax.
Gotcha, yes, so like L&I pensions and those sorts of things are counted towards the total household income. So if you did check yes for someone living in the home, it just asks their relationship, their name, and what they contribute. If you have someone living in your home who does not contribute, you would just simply enter 0. So there'll be a question if you own additional property. So in addition to asking for the address or parcel number of the additional property, we would be asking if it was a rental, if it was occupied, or if it was sold in the prior year. And that's because it would be affecting your income. So if it's a rental property, we would be counting that as income. What else? Maybe you co-own a property with a child or something, and the child lives in the second home. We would not count that as income if that's not. So I guess how am I trying to say that? If, say your child owns the second home with you, and they're just paying the mortgage and you're a co-owner, that would not count against your income. That's just something that you have co-ownership in. That would not affect your exemption. And then if you sell property, we would be looking at capital gains and how that would affect your income as well. So those are just some of the questions we would ask. Yeah.
Out-of-state properties?
We would still like to know about those as well.
Okay.
Yep, so it could be in-state or out-of-state, or internationally. See a few of those. So on the online application, very similar to the paper application, it's going to have a list of all types of income. So you would just fill out anything that applies to you and leave blank or put a 0 for anything that does not.
Is that net income or gross?
It's total gross income. So when you're looking at your income tax filing, it's not gonna be that adjusted net, it's gonna be total gross income.
Gross income.
Yep. Yes.
If you own other properties, non-income properties, and do those value of those properties in any way affect?
Nope. So say you own vacant land, somewhere, and it's just sitting there and, yeah, just part of something that you own, it does not count against you if you're not renting it or anything like that.
Until you sell it.
Until you sell it, then that would come into play. Yep.
I have a question.
Yeah.
Right there where it says the taxable, non-taxable IRA
Mhm.
distribution. If you had to take money out of an IRA to pay for, I don't know,
A
a new roof,
Yep.
does that count against?
Unfortunately, it does. So if it's a one-time distribution, we do count that towards your total income. So it may be that you don't qualify for a reduction for 1 year, depending on how much you took out. Unfortunately, I do run into that, you know, you have to fix a roof or get new siding, or, you know, your home is aging, so those things, that would unfortunately be counted as income. If it's a Roth IRA, we do deduct that out. So a Roth IRA, we count it in the gross amount, but it is deducted back out under deductions. But if it's a traditional IRA, that would be counted.
So a Roth, so that would come off the bottom, whatever the exemption part, so if you took it out of a
Yes.
Roth.
Correct, yes, it would, we just have to verify the distribution code on the tax document.
Okay.
Yeah.
Wonderful.
I'm a little confused as to the, like, say we have 2 forms of income, social security,
Mhm.
and then a pension.
Mhm.
Do you list the whole IRA? You have to list the amount, or just the amount that you took out for that year?
Okay, so not what's in the fund, but the distribution that you took.
Just the distribution?
Mhm.
So with a 401k plan, you don't have to list the amount, you just,
Not if you're not taking distributions.
nothing, okay, okay.
Yeah.
Thank you.
Okay. So we do ask for an income tax filing if you file. You're not required to file an income tax return to apply for our program. It's just gonna be one additional thing that we request to see if you are applying, or if you do file. So. For deductions, proof is required. You'll notice under, let's see. The letter P for out-of-pocket prescription drugs. We will deduct out up to $500 without proof or receipts. Anything over $500, we would be requiring proof of what you paid out of pocket. So proof of deductions would look like receipts. Your pharmacy will print out an end of year statement showing the total amount you paid out of pocket to them for your prescription drugs. If you pay for premiums for Medicare, Parts B, C, or D, sometimes that's through Social Security. Your Social Security 1099 or benefit statement would show the amount that you paid. We ask for that as far as proof. What else? Long-term care insurance, if you're paying premiums for that, typically they'll provide a letter stating the amount that you paid for that year. Service-connected benefits are deductible as long as you provide a service-connected letter showing that you received that benefit. One other thing, what's it under? I always like to mention letter E for durable medical and mobility enhancing equipment and prosthetic devices. Eyeglasses, hearing aids will fall under that. So if you're paying out of pocket for those things, those would fall under letter E. And then if you look back farther into the table here for deductions, it'll actually list out prosthetic devices, and you'll see eyeglasses and things like that in this column. So definitely look through all of those items. There may be something that you might not think applies to you, but actually does. So I see we've got a couple questions.
So I'm not on Medicare, but I do pay $500 a month for the union medical plan. Would that be deductible?
So it does have to be a Medicare-backed plan in order to deduct it. So if it's state insurance or something like that, that's not a Medicare-backed plan.
Private union medical
would not
plan,
be
so
able to
that
use that.
amount is
Yeah,
bummer.
I know. Yes,
A couple questions on documentation.
Okay.
I've printed this out before and
Okay.
it's gone over. On the healthcare and long-term care,
uh-huh,
we get nothing except it's automatically taken out of our bank account.
okay.
So, I mean, do you want 12, you know, it doesn't really say that's what it's for.
No, we don't ask for 12 months bank statements. Sometimes we do require those if you're getting benefits such as like housing assistance with the military or education benefits, because there's no tax documents showing those things. But as far as deductions, we would just ask for the one bank statement, and then proof of what the plan was you're paying for. So typically it would be a copy of the insurance card itself and a bank statement.
Nothing like that.
Okay.
Yeah.
I would say talk to us on a one-off situation and we can figure out how to get the proof that you would need.
And also on disposable medical supplies, if that covers something like the towns.
Uh-huh.
I get those from my husband and Fred Myers, I sure don't keep the receipts from my groceries.
Unfortunately, we do require receipts, so I would say maybe start saving them.
That wouldn't help last year.
What's that?
That wouldn't help last year.
Yeah.
I'm gonna make a comment here. It's just within the last couple of years that these many medical deductions were added. Just to tell you, I've been doing this for a little over 11 years. When I came into office, the absolute most you could make was $35,000. And they didn't have the medical exemptions at all. And so a lot has changed in that time. Basically, it's doubled the amount you can earn. And then there are these many more deductions. However, if you go through this and you meet one of those 3 income levels that has been mentioned, and you're not close to the next lower level, it doesn't really matter whether you have receipts for your depends or not. You don't need to bother. You already are below the $64,000 level. That is cutting your taxes in half. You're happy with that. So you don't have to dig all this stuff out. And it actually makes it easier for them to review it all. So that's just a suggestion, that it's when it gets close, we start to ask questions like, do you have any in-home care that you could get a receipt for from somebody, even if it's a neighbor person who comes and helps you out but charges you something, you can produce that. But if you're not close to one of the limits and already qualify, it doesn't matter. So it's just a tip. It doesn't have to be as detailed and complex as it looks like as we go through all the choices.
I was actually gonna bring that up, so thank you for saying that. Yes, please don't go through the hassle of trying to copy all of your receipts if it's not going to make a change to the income category that you're qualifying for. So if it's still gonna be, $3,000 away from a different income category, it's not gonna make a difference. Definitely do not go through the hassle of providing those things. Yeah.
Did you say this G, that is for like supplemental insurance? Is that?
So cost sharing is a little bit different. I think the one you're thinking supplemental is gonna be under C.
Oh, C.
Yep, so, the Medigap plans, the Medicare supplemental plans.
Okay.
Yep, so your insurance premiums for like a Plan G, a Plan F with Medicare, those types of things, we can deduct, that would fall under, item C.
Okay.
And there you say just a card, because they don't send any kind of money.
Yeah, so typically just a copy of the card so that we can verify what type of plan it is and to verify if it's a qualifying plan. And then typically your bank statement would show that transaction.
Right,
Yeah. Cost sharing though, you brought up a good one also, under item G. So that's, what you're paying out of pocket over your insurance, what your insurance covers. So say you had a copay or something for an office visit and your insurance is paying a portion, whatever you're paying up to your deductible could be a deduction as well. Typically your end of your benefit statement with your insurance would list that amount. Yes.
Could you repeat the questions that somebody asked?
Oh, I'm sorry.
It's hard to hear.
Yes, absolutely.
I can hear the answer, but I don't
Okay.
always know the question.
Yes, definitely. I apologize for that.
That's okay, thank you.
All right, was there any other questions? Yes.
You're saying cost sharing, so like if I pay a $30 copay, but what if I go to a doctor that's not covered by my insurance? Can I include their doctor visits?
So it would have to fall under, your insurance will give you an end of year statement that has cost sharing and it would have to fall into that. So typically, no.
cause I have a doctor I go to that's not
That's
on my
not
plan,
covered.
and they're,
So typically, no, that would not qualify.
I pay cash for a visit.
Okay. It doesn't hurt to provide proof and we can look into it, but typically, no, that doesn't fall under a cost sharing, category. Okay.
One more.
Yeah.
I just, so, remember I asked about just one person has to be, whatever. Okay, so then all these little deductible dealies, does that only pertain to the person who is of age?
Okay.
Or do the other people also get to?
Gotcha. So the question was, if only one spouse is qualifying by age or disability, can you use deductions for the spouse that's not the qualifying person? And the answer is yes, because we're counting combined household income.
Oh, okay.
So if you're married, you have a spouse, we are counting their income as well, so you would naturally be able to use their deductions also.
Okay.
So one of the most important parts of your application is gonna be your required documents, so what you need to provide as far as proof. So at the end of your online application, and there's a checklist on the paper application as well, and we have this little insert, looks just like that. We're gonna ask you to upload your Washington State ID or driver's license, your income tax filing and the supporting documents to that, so your year-end statements or 1099 forms, and a 1-month bank statement from the prior year. It could be any month from last year, but we do need 1 month from any account you may have. So if you have 2 checking accounts and a savings, we would want 1 month from each of those. If your property is in trust, we are required by law to have a copy of that on file to verify that it's qualifying and meeting the ownership requirements. A VA award letter would be required if you're receiving VA service-connected benefits. A death certificate, maybe your spouse passed away in the prior year. That would also affect how we look at income. So say your spouse passed away in February of 2023, we wouldn't be counting any of the income that they may have received in the prior year. We would subtract that from your income total. We ask for a death certificate just simply to help you in removing their name from the tax rolls.
Is that just from the prior year?
Yes,
If they
so.
died just from the prior year?
Or if they're still on the tax rolls and you would like us to remove their name, we could do that for you. So VA education or housing, we do ask for 12 months of bank statements, or sometimes they have access to an online benefit summary that would show what you received monthly. Those things are counted as income. And then there's a section where you would put in proof of any of your deductions. So this is just talking about what I just explained would be required with your application. Yeah.
On the 1 month of bank statements, what about if you have like an investment account, like an IRA or CD, that kind of thing, or
If there was a year-end statement, we do request those.
Okay, even if they go on your 1099?
So if it's a 1099, we would ask for that rather than the statement itself.
Okay, so that shows the income, okay.
Yep. Is there any other questions? Okay. So next is just going to be a summary of everything that you filled out on your online application. You're just gonna check a box that certifies that your information is accurate and correct. And then you'll have an online signature where you sign. And it would get submitted to our office. So that's all I had as far as the application itself. We have time for any additional questions. If there's something that you would like to ask and didn't want to do it in a group setting, Savannah and I are here to answer any questions on a one-on-one basis after this. And then we do have our contact information up here for you. Hours of operation and all that good stuff. So is there any other last minute questions?
I have a question. Thank you for doing this.
You're welcome.
I represent a group of people, seniors,
Okay.
and some seniors do not know if they're on the 64,000 level or not.
Mhm.
Maybe because we haven't done our taxes yet.
Okay.
And my question is, you talked about the 1% level. Is there any thought about, you talked about maybe that might be increased to the 2%?
For the taxes that you
Yeah,
pay?
for the property tax.
I think that would be a question maybe for.
Is that, I'm not trying to.
You're talking about the lid lift?
Yeah.
That might be
I
a
didn't
question.
hear the question.
He was talking about the 1% going to the, we had mentioned maybe 3% increase in the.
Oh, sure, I don't wanna confuse things too much. That is on the revenue side, what the cities and counties, what we say are not special levies that are voted, but are the statutory levies that the cities and counties and some other agencies collect. So it really doesn't have to do with what you pay at this time. It's gonna be in a future year, they will be able to increase the taxes based upon your value of your property. But what this is doing, of course, is in effect freezing and reducing the value of your property, so that, and exempting you from those special levies. So it really, it's a future thing if it happens, and I may have confused things by throwing it in. There's several things in the legislature this year that may or may not pass in a short session. Not to get into the weeds, but there's another measure that really would shift more of taxes away from moderate income people to the Bill Gates of the world and to business. And that's controversial because our state constitution has a uniformity clause in it that says everybody pays the same rate.
Right.
Except for these exemptions like we're talking about. So that's to be determined in the future. It will not affect this year's taxes.
So that would be a legislature determination rather than a county?
Correct.
Okay,
The
my
county-
question is that if, is there another move in the legislature to increase, the income level 64,000 and up, like inflation increase or something like that?
Okay,
That
well,
would match.
keep in mind, this latest increase is a 40% increase in 1 year.
Right.
So, no, what we did, the assessor said, please stop changing things every single year. We have to retrain our staff, reprint our forms, change the rules for the public,
Right.
have more forums. So it's gonna be, only 3 years out that they will look at any further adjustments, just to give some stability. But again, this increase from under 46,000 to 64,000 with all the allowed deductions is a huge change that is gonna let thousands more qualify, which is fine. But we're saying, let's not do that on a weekly basis or something and make it totally confusing. So they'll take another look at it in 3 years.
Okay, thank you, sir.
Okay?
Yeah.
Once you submit your application online, what's the process for letting us know that you accepted it, if there's a problem, or do we just wait 6 months and then find out that, oh, it never went through, or?
So you do get a notification once you submit that says we've received the application. Not everything's perfect, so definitely follow up if it's been several months and you haven't heard from us, please. But that shouldn't be the case, so, yeah, I don't think we've had any, knock on wood.
But we do get something notified that, oh yeah, right then and there, it was accepted.
Yep, you get a notification right away that it's been submitted on your behalf. Typically, we are processing applications that were received at the beginning of this month, so we are not 6 months out currently, but we are set to mail out 1,800 renewal applications in March, so we are gonna get busy. And then with the change in the income limit, we do expect an influx of new applications as well. So we won't be current probably for long, but we are doing our best to get things processed as quickly as possible.
On the documentation, that's a lot of scanning. If we decide we just wanna mail that in a packet.
Definitely.
Should we still submit the application online or just a paper copy?
I would just do it all in one packet together. Yep.
Can you bring it in or do you have to mail it?
So you can bring your application in person or you can mail it, whatever is more convenient for you. Applications are received first, processed as they're received, so it won't make it any quicker if it's mailed or turned in person type of thing. So, yes.
I know I was late coming in. Did you go over the, income portion already?
The income.
This part of it?
So that's just, I would go through that list and see what pertains to you, and it'll explain what to include as far as proof, depending on what forms of income apply to you.
It says your gross income benefit was $10,000 and $4,000 was subject to federal income tax. How do we know what was subject to income tax?
So on your tax document that you receive, say it's a pension, and you paid a portion in taxes or withheld a portion, you would be looking at that gross distribution amount, typically in box 1.
Okay, that's the one that we get from Social Security?
Social Security or a pension, any of those end of your tax documents that you're getting.
Okay, so it would tell us if they weren't taxing the whole thing.
I would just be looking for the box that says your gross distribution.
Gross distribution, okay.
Yeah.
I'm so confused. So if I wanted to file for 2023, that would be on my 23 income tax, correct?
If you're wanting a reduction in property taxes this year, 2024, it would be based on your 2023 income.
So then 2023, okay.
So it's always 1 year behind on income.
Okay, that's
So
what I'm sorry, that's what I didn't understand.
yeah, so what's been closed out with the IRS, you sent off your income tax filing, you've got those tax documents back.
So specifically, the 64,000 isn't good until 1 year later.
It's this year, the limit is 64,000 based on last year's income.
Okay, that was my question.
Yeah.
Thank you very much.
You're welcome. Yes.
You touched upon this, I don't know if I can retrieve my 2023 tax, form that I sent in.
Okay.
So you said we don't need that, we can just use our, like, the pension and the social security?
You're talking about your income tax filing?
Yes.
So
yeah.
2023, you'll be filing right now. Have you
Okay.
filed yet?
No, I haven't filed yet.
Okay.
No,
So 2023, that's what's happening right now.
right now, but.
So if you're thinking
Okay.
last year, what you filed in
Forget
23
last
for
year.
22.
Yeah, so it would be this, well, that's what I'm saying, 2023 is last year,
Mhm.
and that's gonna be based on this year.
This year's
Correct.
property tax
Yeah,
is based
this
on
year's-
last year's income,
But
but
I
you would
don't-
be filing that right now. So though that tax return is due by April 15th of this year.
Okay, yeah, I
Yeah.
think I was confused.
Okay, I know, it's very confusing. The prior year thing is, yeah,
Yeah.
yep, totally get it.
All right, are you available for some more questions after?
Yes,
Okay,
one-on-one, for sure.
Out of respect for everyone's time,
Yes.
thanks for coming out today. I just wanted to note that we have a University Place council member here, Kent Keels, in the back. He thought it was so awesome he had to come out here and see what's going on out here. And we appreciate council member for being here, and Mike, thank you for coming out. Thank you, staff. Thank you for all the awesome questions. And I encourage you to check everything out, so thank you.
Thank you.